We're going to start today's session with a conversation with Bill Baumel, Managing Director of Ohio Innovation Fund. Bill, welcome to the show.
Great to be here. Thank you.
It's been a while we haven't talked, so I'm looking forward to catching up on what's happening in your quarter of the universe.
Yes, yes.
So let's start with some introduction on where you are with your work with Ohio Innovation Fund, what's happening in Ohio as an ecosystem in general, just some overview.
Sure, glad to. So since we last spoken, we've invested in about 20 startup companies here, primarily in Ohio, although we do, look towards the Midwest as well for similar type opportunities. We're seeing a lot of we typically invest at the Series A level. At times, for on a selective basis, we will invest at the seed level. So we're typically getting involved with companies when we invest around $1 million or so to own 10 to 15% of the company and kind of get them off the ground. Seed companies we may put a few $100,000 into. And then we work very actively with them because unlike Silicon Valley and Boston and some other areas, both nationally and internationally, there's not a huge cohort of previous successful entrepreneurs here, or even kind of the understanding of startups in general. Whereas in Silicon Valley, someone's mom, dad, sister, brother, roommate, friend may have been involved with startups. You kind of understand what it's all about and all that. So there's a lot of both, strategic, operational, educational, working with the companies, and we've been pleased with our success so far. We typically, our initial investment, most of our companies are relatively capital efficient. We realize that, hey, for every dollar you put in, you better create 10, 20, $30 million of value, if you want to have a strong return for the founders and the investors. And we've been pleased that over a third of our companies have already graduated from our initial kind of 7-digit valuations in the seed round or Series A round, to 9-digit, and in one case now, unicorn status in subsequent rounds. So that's been very positive, but also the business momentum is behind that, which is good, because here in the Midwest and in Ohio, there is a lot of focus. We've had to make people, obviously, a lot of educational, operational, strategic help, making the teams think bigger to realize what their true potential could be and trying to fulfill that potential. But yet at the same time, you have a very capital efficient model here, where not only the valuations are lower, but that amount of money taken to get anywhere is lower. So we have companies scaling to 10, 20 million plus in revenue off of their initial 1 or 2 financing rounds. It's not taking hundreds of millions of dollars to get there. It's taking millions, or at most 10 plus million. So the returns we're seeing on our investments are very strong. We have had 3 exits so far, one in HR tech, and then one in there's one in the med tech area as well, which was interesting because only $10 million went in the company in total, and it exited for north of $400 million. So the type of return we're seeing in those cases, where basically, we're looking at very strong returns given the capital efficiency and the, and the progress and the exit valuation. So that's what's nice here, is that, you can have a few $100 million or even $100 million cybersecurity company sold, and you can make a large amount of your money because it did not raise $100 or $200 million like on the coast. It was much more capital efficient, much more deliberative, and much more kind of financials focused in terms of growing ARR and customer base. So it's been good so far. Overall, on track on this fund to return about a little bit over 5x on the fund, which within our universe of opportunities here in Ohio, the Midwest, is kind of as strong or as at the top funds performances on the coast. So we're pleased with that as well. We've already returned a majority of the fund, and most of our investments are only about 3 or 4 years in, because I think when we first talked a few years back, I was just getting started. I'd come from Silicon Valley and spent 20 years out there and had a number of exits, but kind of coming back here to bring that to the Ohio, the Midwest, and we've really seen that develop there. We had to start pretty much almost from scratch with a lot of these opportunities, and start with a group of 3 or 4 entrepreneurs and really build things up. So it's been a lot of fun as well.
Bill, well, how big is the fund?
We're
size?
only our it's an institutional fund. Our LPs, are sensitive to anything being disclosed outside of what's in the SEC forms. But we typically don't go over $100 million in our funds because then, in terms of capital efficiency, selectivity, that becomes an issue. And there's a couple things. One is too big of funds, you start getting motivated by management fees and not carried interest, and so your interests aren't necessarily aligned with the companies in terms of that focus on overall impact and return. And second piece is that if we are doing more capital efficient and selective investing here in Ohio, the Midwest, so we don't want a huge fund size that gives us pressure to deploy more and more capital into more and more companies, into each company and into more and more companies. But we'll typically
So
invest
you
up to
said,
about 4 million in a company over time, 4 or 5 million.
so you said earlier that your preferred funding round is Series A, where you put in a million or so in that round, and in some cases you do some seed investment. Could you talk about how Ohio entrepreneurs are getting to Series A? Is there a seed ecosystem that is supporting, or is it more a bootstrapping uh, tendency or bootstrapping culture that is going straight to Series A?
There's a little bit of both. There is a legacy kind of government partnership model that we
Mm-hmm.
don't have any government funds ourselves that has in the past, and it continues to be active here. But more and more, as we've had more and more successful exits, successful entrepreneurs, for example, in our one company I was talking about, that med tech company that exited for $400 million, just raising $10 million of preferred stock. That's actually an Appalachian portion of Ohio. And that created 47 millionaires in Appalachian, Ohio. And so now, as things, as we have more and more exits and such, there's more and more angel investment around, which I'll call more pure, angel investment. And there is a lot of bootstrapping as well. But we do go back to the seed round as well and provide the initial capital. We've spun, for example, a cybersecurity company out of Ohio State, actually a PhD from MIT, Professor Emery Coxwell, into Data Anchor, which actually has now, first seed money of a few $100,000 got the product done. The next seed money of a few $100,000 has landed our first 25 customers. So on basically about a million or so total, we now have a company with 20-25 people and with about going on 30 some odd customers and quite a few major partners as well. So we are, we do that seed stage selectively, but they do, there is a pretty robust, decent and robust angel network starting to develop, similar to a little bit on the coasts.
And the medtech company that has had a solid exit and has created a lot of wealth in the community, what path did that travel? Did it raise seed money, or did it bootstrap up to a point where it was able to attract a Series A? What was the trajectory of that company?
It was bootstrapped for a number of years. It was bootstrapped with some angel investment, some local angel investment, which is what created all the number of 47
Mm-hmm.
employees and investors, individuals, but primarily employees, staff. But then we came in as the first institutional investor. And really did a bulk of the investment of that the largest portion of the 10 million investment, brought in a few other of our partners into that, and basically just took that one major institutional round to get all the way up to about $100 million run rate from where it started, which is very very small.
What is
Um,
the business?
what's that?
What is their business? What is their business?
From a company such as Pfizer and Merck and Moderna.
Sorry, you kind of froze for a moment. So could you rewind a little bit? I asked you what is their business, and then the screen froze.
Oh, I'm sorry. Yeah, so it's in the cold chain, logistics and cold chains providing
Ah,
for
okay.
pharmaceuticals and for vaccines and those sorts of things.
Okay, terrific. And geographically, where is the bulk of the work happening, entrepreneurial work happening in Ohio? Is it in Cincinnati, Cleveland? What's the, you know, what's the geographical footprint of startup activity?
Yeah. There is, I mean, there's a decent amount of what I'll call advanced manufacturing in Athens. Particularly applied to med tech, which is the Appalachian area. Within Columbus, there is quite a bit of enterprise software, data science, cybersecurity, SaaS, fintech and such. We have companies, here, Data Anchors here in the cybersecurity area, Aware is here, which we had a single digit pre-money valuation on about 3 years ago, 4 years ago. Goldman Sachs just led around at about 10 to 15 times our initial valuation and put in about $40 million in the Series C as we continue to grow and expand. We have data science companies like Amuta here. So that's kind of, a Columbus. Cincinnati in the Mason area, which is just the north suburb of Cincinnati, has quite a bit of med tech activity. We have a company called Enable Injections there that does onboard drug delivery. We have another company that does scanning for various diagnosing various types of heart diseases. There is some SaaS down there as well. With Procter and Gamble and Cincinnati too, there is a little bit more consumer type tech down there. And what I forgot to mention about Columbus as well is I know with your group it's mostly on the tech side, but there is a robust kind of biotech community forming here because there's like Nationwide Children's Hospital and such who 5 years ago was not spinning out cell and gene therapy and other type opportunities. Now they are. Cleveland historically has the Cleveland Clinic and a pretty strong med tech, but we're actually one of the companies we exited was a HR tech company up in Cleveland, providing onboarding, SaaS type onboarding, next gen type services, and that company was a nice exit, very capital efficient, made a nice return on that. We also have a fintech company up in Cleveland that is in the embedded finance area. Actually, one of their new partners is Coinbase. And that's another thing we're seeing kind of throughout Ohio is that when I mention some of these companies like Enable Injections, we actually are having a lot of our partners, strategic partners, get involved closely with the companies because they like what we're doing and also invest in the companies. So, for example, Sanofi led the Series B at Enable Injections. Obviously, I mentioned Coinbase is very close with Alvieri up in Cleveland. We have a great relationship here in Columbus, Aware with Microsoft and Slack / now Salesforce. Amuta has great relationships with like the Snowflakes and the Databricks. So we're seeing that as well. But when you combine all the three kind of C's together, Cleveland, Cincinnati, Columbus, and you add in Athens, actually some good activity in Akron, Dayton, particularly with the Air Force Research Labs there. I think I mentioned Akron and Toledo. There's a pretty robust environment developing here where we actually just had an article the other day, and this is for the Cincinnati portion of it. There's just as much, if not more, happening in Columbus as well, but where there are actually three companies competing, not just to be unicorns, but to be decacorns going forward. Three startups. Enable is one of those. So there's it's a lot different when I started here 5 years ago when I kind of said I didn't know what I was getting myself into, and kind of, it's turned out to be a great experience, and it's kind of just fed on itself.
Well, it's really great to hear about all this activity. We have seen many ecosystems come up through our work, and we've tried to cover a lot of these companies and ecosystems. Utah is a very good example. They're a bit ahead of you because they've had a lot of exits. They've had, really sizable exits, and that has created a very good angel and seed money pool and it's a naturally entrepreneurial people. So it's done very well. They've built very good bridges with Silicon Valley. Ohio probably has better bridges with New York and Boston than with Silicon Valley. But right now, also things have changed in Silicon Valley. There, as you know, before people used to want to only invest in local companies, and now that's not the case at all. And investors are very happy to invest in companies as long as the business models are proven and are venture scale business models both venture scale acceleration and venture scale TAM, they are willing to invest in companies anywhere. So the globalization of entrepreneurship is in full swing right now. So I'm not at all surprised that Ohio is doing as well as you're describing the nuances of. And it's wonderful to see that. And I think the capital efficient ethos is very much in sync with the way we think about entrepreneurship, especially in the beginning of an ecosystem. Capital efficiency is very important because when there is not as much money in the ecosystem, it's by bootstrapping that you start bringing companies up, and then you start attracting some funding, then exits happen. So you're further down in that cycle, and that's terrific. Now it's going to snowball big time.
Yeah. I'd like to add one thing to what you said there in terms of the willingness of those in Silicon Valley and Boston, elsewhere, to invest in Ohio as it, as it grows and becomes, provingly profitable and all that, just given the level of competition valuations on the coast. We're finding there needs to be a balance in that. You do need a strong local partner to kind of work the day to day. And so it's a balance there in terms of when you bring, when you bring those funds in, because a little bit too early and you start going, oh, well, geez, we're going to do quarterly board meetings and one's going to be on this coast and another's going to be on that coast and this, that, and the other. When the company is not at that point of kind of proven scalability, that can be difficult. And because it's still, kind of in the seed stage and Series A stage, and depending on where you are, the Series B stage, there's still a lot of work to be done in terms of, you've established some initial product market fit. You're still on the messaging side, expansion side, in terms of what sectors to expand in. I mean, they're, building out the team, scaling the team, getting the right people in place. There's just a lot of work still yet to be done. So that's one of the balances. And actually, the other interesting thing is that it's almost switched here, where before it was like, okay, we need to raise a little bit more than you're thinking about as an entrepreneur here in Ohio to achieve what this company can achieve, to almost the opposite and saying, okay, for example, we had one company that had raised, let's call it 10, 15 million, and had a multi-$100 million exit opportunity. Actually, a couple of them come on the table. And the entrepreneurs and we as a company chose to go forward with another round instead, to try and achieve, we believe we can achieve more from there. But we had to very clearly articulate and make people understand that if you're going to take another round of $30 million on or something, you need to create at least 300, if not $600 million in incremental value to justify that round. And that's right. So that's always the case where, and so there's a lot of people right now celebrating, I raised $25 million. Okay, well, you can't talk about a $50 million exit anymore than that. You better be talking about a $250 million to $500 million exit potential. And then what does that mean operationally in your operational plan in terms of the ARR, or what metrics you need to get to, and who can buy you for that, or where, or if you can go public at what point for that. So that's kind of a little bit of a shift over the last 5 years in Ohio here.
And what is how many funds are operating in the early stage, the seed stage, Series A? How many funds do you have, and how much capital is available as a pool?
It's, there's ourselves is, I think we have 20, we're probably the largest and most focused on the Series A stage. There's, each location will have an angel group or a couple angel groups. There's an angel group a few of them in Cleveland, a few in Columbus, a few in Cincinnati, in Athens, and Akron, Dayton, and Toledo. There's one other, Drive Capital is here, but they tend to be a little bit later stage, and they're going all, a little bit all over. They have some investments in Canada, Colorado, Washington, a few in Ohio as well. But we're pretty much the primary one focused here in this area right now. But we are seeing more, obviously early on, strategic partners wanting to co-invest with us. Cardinal Health here in town was one, as well as I'd mentioned the Santa Fe's and others, on a more international basis. But we're seeing more and more people wanting to join us in the Series A, where they say it's a model where, okay, we we appreciate what you've done here. You've done a great job, and we trust you kind of as our boots on the ground or as our kind of day-to-day partner here in Ohio. And then that was a case of Data Anchor. We actually have some investors both from Silicon Valley and from kind of the Western, Salt Lake City type areas you talked about. But we are the ones kind of day-to-day working with the company from that perspective. So we're seeing more and more
And
people.
how many entrepreneurs are we talking? What is the pool of entrepreneurs that are circulating and operating in Ohio right now?
Almost in our investments, almost everyone is a new entrepreneur that we've dealt with. There's one fellow, Mike Hooven, who took AtriCure public. It's now a few billion-dollar company, and he's CEO of Enable Injections. But other than that, a lot of this is, and one unique things with that is that the founders are very mission focused and have a lot of fortitude because they're investing what they believe in. So it's usually someone has a problem. Jeff Schuman at Aware is working at Nationwide, and he's trying to roll out Microsoft Yammer. And there's all sorts of compliance questions and this, that, and the other. Well, let me create a cybersecurity compliance risk management SaaS platform for the Yammers, well now Microsoft Teams and the Slacks and the Cisco WebExes and such. And then I turn that into adding data analytics, and so that's usually how entrepreneurs are born. But as far as the deal flow, so that's kind of where they come from. As far as the deal flow, that has increased dramatically, particularly in terms of quality deal flow. There's more and more people with good ideas.
What are we talking about? Is it like 500 startups at any given time, 1,000 startups, 8,000 startups? What's the ballpark? No, not exact, but what range are we talking?
I'd say probably there's now a few hundred.
Few hundred?
Yeah, a few hundred. I don't know whether it's 150, 300. I mean, somewhere
Somewhere in that ballpark.
yeah, in that range. There's probably, if you want to look at startups that are, have really made some great progress. I don't know whether that's 50, 75. Right now, kind of currently operating that probably started a few people that now are at 10 and plus revenue on the on the ARR side in terms of if you're on the tech side or are pretty far along in FDA or clinical trials or what have you on the med tech side.
Very cool. Very cool.
Let me say one thing to that. I'll give you an idea. When I first got here, the growth company of the year in Ohio was doing about $5 million in revenue. That's 5 years ago. Now, I mean, there's companies that we have companies doing 25, 50, I mean, $100 million in revenue. So that's kind of been a huge change.
Huge, yeah, that's huge. Well, it's wonderful. I think it's going to be, a big snowball effect from here on. So you've done great work, and the community has done great work. So it's great to see the progress.
Yeah, no, it's been fantastic, and I think we're happy with the progress of our companies and how broad based it is. That we will likely have a majority of the fund, about 12, 13, 14 of our 20 companies exiting successfully. Some at 2 to 5x, some 10x plus, some 20x plus. That's very So it's not just one. It'd be nice if have a 5x fund to have one huge winner or two huge winner. That's great, but to have a broad base throughout, both kind of throughout the region as well is kind of validating. And then those companies, as you know, the founders, the CTO go off and do this next, and the CEO go off and do this next, and the product person will go off and do that next. So like you said, that's snowball effect.
The usual cycle of people learning in one company and then going on to find their own. It just takes time. That's all.
Yep. Agreed.
Very good. Wonderful work. Bill, thank you for coming today.